and welcome to MarketBeat's financial news and analysis. Today, Chris Markoch is back with us to talk about Apple after the company reported earnings last week. Although many consumers won't say anything bad about their iPhone, me included, Apple remains one of the Wall Street's most downgraded stocks. You'll find that MarketBeat has it on its list of the top 100 stocks that have been downgraded or had their price target lowered in the last 90 days. That's something you're going to want to keep in mind. Today, Chris and I will talk about where the Apple stock price is headed, if declining sales will become the new normal for Apple, or if it can find the capability to change the narrative. We'll also talk about why Apple may or may not be the right fit for your portfolio. We have a great discussion planned for you today. You're going to want to stay tuned. Chris, glad to have you back.
Thanks, Lacey. It's great to be here.
All right, Chris, when we talked about Apple stock in December, and I'll go ahead and link that in the description below and up top here, but the stock was near the 52-week low. A lot has changed since then. Is Apple stock back, and where do you think it's going from here?
So if we're going to talk about technical analysis, you'd probably rather have Thomas Hughes here, but I'll do the best I can.
Sounds good.
Clearly, if investors look at the chart, they can clearly see that when we were talking about Apple back in December, there was clearly a bottom that formed. And since then, the stock has been progressing steadily upward the way you'd like to see it. And that was until the earnings report, and then it gapped up sharply about 10%. So what I would say is my concern at the time of earnings was if it didn't hold where it was at around 151, 152, then I could have seen it retreating back to around the 143, 144 level. That's where it was prior to earnings. It looks like it's held that level. And in fact, I saw this morning it's up a little bit. So that does appear to be a new level of support for it. Where can it go from here? There's some variables right now with the economy. There's still a lot of uncertainty. We're going to be getting a lot of economic data here in the next couple of weeks to either confirm or contradict some assumptions that are going on. I could see potentially, if this rally continues, Apple could maybe get up to around that 162, 163 mark. I don't, however, see it making it all the way back up to its 52-week high.
All right, if you don't think it's going to make it back up to its 52-week high, is that because you think Apple's miss on revenue and earnings is a new normal, or what are you thinking with that?
It's probably a little too early to tell. I don't want to be the prisoner of the moment. I think there's a lot of people that are talking about Apple and they're being the prisoner of the moment as far as, oh, they're doomed and sales are doomed. And the way I look at it is the data says what the data says. So objectively, hardware sales were weak last quarter. That means iPhones, that means iPads, that means Apple Watches, all of that. Sales were down. But Apple still has a tremendous profit margin. Their profit margin is 38%. So on every iPhone they sell, on every Apple Watch they sell, the company makes 38 cents profit out of every dollar. The company's not in any financial trouble at all. And as I've mentioned before, demand delayed is not the same thing as consumers deliberately going out and choosing other products over Apple. The Apple iPhone 14, the sales may be down, but it doesn't mean that they're not going to get those sales back later on. Because again, with profit margins like that, Apple can afford to do some discounting that probably some other manufacturers can't. And remember, also here, Apple is becoming a sum of its parts company, whether people want to admit it or not. The services business continues to deliver, continues actually to grow in importance to the company. In fact, the services business, which includes Apple TV Plus, generated like $19.5 billion just in the last quarter.
As you're talking here, Chris, I'm just sitting here thinking of all the Apple products I have right now. I got my AirPods in, using an iPad over here.
Right. It's an ecosystem. It really is. And once you're in the ecosystem, there's two ways to look at it. There's people that say once you're in the ecosystem, it's like a cult, and I'm like, well, no, it's not. It's people are in the ecosystem because the products are easy to use. And I'm all for simplicity, so it's once you're in it, you have to have a compelling reason to get out of it. And I don't have one, so I'm in it.
Yeah, for sure. All right, Chris, that brings us to our last point here.
Right.
Should investors have Apple in their portfolio or not?
So once again, I'll be transparent and say, as I did in December, I own Apple stock. I still own Apple stock. And I think it's a good stock for most portfolios, but there is a difference between whether you're right. Well, it always depends on whether you're looking at this from the standpoint of a short-term trader or an investor. When you look at Apple's performance just in the last calendar year, let's say, it's been choppy. It wasn't a great year for growth investors. Tech stocks in general were just beat up. The best way, if you were a trader and you were looking to profit from Apple in the short term, was to sell the stock short. In fact, Apple was one of the most shorted stocks in the market last year. So traders were very actively betting on Apple to go down. I don't know if that's a great trade anymore, but what I would tell you is if you're looking at Apple as a long-term investment, all you have to do is widen out the stock chart. When you widen out the stock chart, you see the stock is on a clear growth trend. Again, this company is financially very stable. They have a war chest of cash. Some critics might say they have too much cash on their balance sheet, but they have a war chest of cash that they can deploy for various things. This is a solid company. Now, having said that, again, if you're a short-term investor, there might be better options for you, especially if the market is starting to pivot towards growth. And if you're an income investor, that you're really looking for stocks that can generate income through dividends, Apple probably isn't a great choice for you there. As I've always said about Apple, it's a growth stock that happens to pay a dividend, but certainly it wouldn't be considered to be a leading dividend stock for most investors.
All right, let's get things wrapped up here. Chris, always a great time chatting with you. I hope you know how much I enjoy having you here with me today. Let us know in the comments. Good. Let us know in the comments below, what are your thoughts on Apple stock, if you'll be adding it to your portfolio or not. Just a quick reminder for all the people that made it to the end of this video, MarketBeat's goal is to empower investors like you to make smart trading decisions. We do this by providing timely stock market news, tools, reports, and much more just for you. And for a limited time, you can get access to all of these tools at 50% off by clicking the link in the description below. You'll also get a free 30-day trial to test everything out. Do not forget to subscribe if you haven't already, so you'll be alerted when we post our next stock analysis video. Go ahead and let us know in the comments what stocks you want to hear about next. Otherwise, Chris is just going to keep deciding for you, right, Chris?
Yeah. And actually, we would love to hear from you because that's what we want to talk about, the stocks you want to talk about.
Yes. All right. Thanks for sharing your insights with us, Chris. We'll see you in the next one.
You're welcome, Lacey.